impressive intraday gains, and by virtue of that, cracking above 81 cents. We haven't seen this since early 2018. Let's try to dissect what's going on here and how high our currency could end up going against the greenback. Adam Button's chief currency analyst at Forex Live. Adam, I'm going to throw it straight to you. What's going on here?
Well, I mean, everything's really coming together for the Canadian dollar. I mean, we have an insane bull market in commodities, and now this latest move today is on a strong retail sales report and a lot of U.S. dollar weakness. And the overwhelming thing is the weaker dollar. You know, the Fed comes out and says, we're not changing anything. We're not in any rush to taper. We don't even want to talk about tapering right now. And when we listened to the Bank of Canada a week ago, they said they took a step ahead of the Fed. And now it looks like the Bank of Canada is 2 steps ahead of the Federal Reserve towards hiking and normalizing rates. And the Canadian dollar is simply responding to that. And I think it has a lot further to run.
Now, you will find doubters, right? When it comes to the Bank of Canada, you said being a step ahead now, 2 steps ahead, saying, come on, would they really go before the U.S. Federal Reserve? When you look at the reaction in the currency market, it seems that at least there's currency traders who believe in that story.
Yeah, you know, there are a few things that are different. And, you know, the commodity part is one. But the housing market is part of it as well. And I think everywhere in Ottawa, people are worried about this ending in tears, which it almost seems like it has to at some point, but they don't want it to happen now, or they don't want it to happen on their watch. So there's less of a reluctance to hike and to take whatever pain that comes with that. Secondly, the Bank of Canada kind of has the Fed to lean against, right? Because Fed policy sort of drives the bigger market. And so the Canadian, you know, they have a little bit of leeway to do that. And thirdly, there isn't that belief like there was maybe 5 or 10 years ago that a higher Canadian dollar will really derail the Canadian economy. Central banks everywhere have come around to the conclusion that, you know, there isn't this sensitivity that they thought with weaker currencies and manufacturing. And of course, Canadian manufacturing is a smaller and smaller part of the economy. So there are a lot of factors that feed into that. And then finally, I think it's time to have a conversation about, you know, the Canadian wage subsidy, the Canadian emergency wage subsidy, and the difference between that and what the U.S. did. So Canada really kept people on the job by subsidizing employers, whereas Americans gave out generous employment insurance. And that took people out of the labor market. And we've seen early signs now that this attachment to the Canadian labor market is producing a faster recovery in Canada. And I think we're going to hear a lot about that in the next few months as it becomes more and more clear.
Okay, definitely some clear catalysts there. So at above 81 cents, I have a feeling that the loonie has probably already hit expectations of some currency watchers for the year. How high do you think we can move here?
Yeah, I think 83 cents is in the bag. You know, there's just this momentum right now. And today, assuming a strong finish, we'll finish above those March highs in the Canadian dollar. And it just will march from there. There's no slowdown in the commodity picture. And I think that's the real burgeoning tailwind. Oil is probably the final leg to get the rally there. And that's uncertain with OPEC, but I believe the long-term picture is very positive. And they're just, you know, we're seeing a lockdown throughout Canada right now, which is terrible news objectively, and the market doesn't even care. You know, we've seen again and again that the market can look past that. And when you look at Canadian retail sales today, it's just a consumer that's ready to spend. And I think Canada is as good a place, or will be as good of an example of that as anywhere.
All right, before I let you go, I want to ask you about the U.S. dollar, because obviously it's had its sort of bouncing around in a range. It came off greatly from its levels of last year. Longer term, lots of people are saying it's going to continue to weaken. What's your longer term forecast for the U.S. buck? Yeah,
I mean, you had Jeff Gundlach on yesterday talking about the reasons for weakness in the U.S. dollar, and it's clear there's an enormous trade deficit, enormous fiscal deficit. You know, You know, when you get a global growth cycle, the U.S. dollar is the laggard in that. And that's inevitable as money flows into emerging markets, flows to things like commodities. So that, the timing isn't exactly clear because the U.S. is coming out of this pandemic, but already we're seeing signs that money is shifting to somewhere like Europe, which is on about the same timeline as Canada. And then after that, it will spread further to emerging markets, just where growth will be better in 2022 because it's so front-loaded here in the U.S. now. Combine that with the Fed that absolutely seems committed to keeping rates pinned, and you have an incredible recipe for just a long-term dollar bear market.